Okay, so we can look at some stuff. I'm in, I'm amazed at energy, and I don't know if you saw it or if I mentioned it the last time that we were on, but what I noticed in, I'll show you. Where are we? Here we go. What I noticed here in the nat gas was really pretty simple.
Hmm.
What I noticed was, and this is only a 1 year weekly, what I noticed was that, we had this very specific area. And every time we got down there, I said, you know, geez, maybe it's going to break here. This was a higher high. Now we have lower highs and maybe a lower low. And when you look at it on the daily, can you imagine a scarier looking chart as of Tuesday?
Yeah. Yeah.
New
Even
low, new low
what
on the daily,
new low on momentum.
on moment, everything rolled over in the MACD over here. And so what I did was I bought it. I mean, I bought it because, here's
Yeah.
the breakout. Here's the bottom. Here's the bottom. Now, hopefully, we have a triple bottom. And I mean, tonight you can see where it is.
Hmm.
Uh, and I think that most people think about this more specifically as a weather issue, but that actually is something that I um, completely discount because I don't care whether it's 15 degrees or 115 degrees. In order for the UK and the Eurozone to do business, they need the power involved. And frankly, they can't burn enough coal
Right.
to get it. And really, the only thing left to them now that Russia has really basically cut them off completely is nat gas. And, the problem with nat gas is it's not like crude, it's not like uh, gasoline or heating oil. You can't process it and let it sit. You got to process it, you got to ship it, you got to unprocess it at the other end in order to use it. And so, they probably will not have the kind of storage. Like right now, they keep on saying that they have enough storage for this year, and what about next year?
Yeah.
Uh, and I mean, it's just amazing. I went out for drinks for the first time in a while. I think it was Wednesday or Thursday. And there's a guy I know who is he's a general contractor. And he was telling me about, um, he has a fleet of trucks. And even though gasoline here is about 335, diesel is still 515 to 550.
Yeah.
And I think that up here, the problem is not so much that there's a particular shortage, but um, how do you heat where you are?
Here.
Yeah,
Oh, it's mostly electric.
off right here too, in where we're living now. But the Northeast uses a mountain of
Oh,
heating
yeah.
oil.
In population in population centers on the East Coast for
Yeah,
sure.
and so nat gas, I mean diesel and heating oil are pretty basically the same thing.
Hmm.
I mean, I remember seeing years where when we the last time we had any kind of a shock in oil, they were stopping trucks on highways and checking to make sure they were not driving using heating oil, which was about $1.50 cheaper, but still ran their equipment.
Yeah.
I haven't heard about that lately, but it's not even winter yet. Winter doesn't start for another 10 days. So when people tell me, oh, it's so warm and everything, my attitude is, yeah, I know it is. And
So
pretty soon it won't be.
yeah, the dynamic with it, the reason, and it was really a big reason why I purchased position in the Invesco DBC
Yeah,
in the summer was okay, it's certainly tradable, but I think the writing was on the wall that we were going into a winter due to things in Europe and everything that was difficult to predict, but I knew there would be a crunch. So, I bought DBC
right,
saying I want exposure. I'm not trading it. I'll take exposure to it. I think it's um let's see, uh asset percentage 6.18 of nat gas. It's Brent, WTI, gasoline,
right.
and a mixture. But I wanted access to both the agricultural commodities and the petrol complex. But yeah, it's factors like in a normal year, Cam, production of things like fertilizer was not really an issue.
Right.
It was a heating conversation. Well, now, suddenly everybody's learning about, oh, wait a minute, you need natural gas to produce fertilizer and all these things. So, and then we have the issues on the Mississippi with
Right. Oh,
things
yeah.
not being able to move because of low water levels. So there's so many different dynamics involved now that even regardless of what even I hear from EIA and what have you, I want that exposure.
Yeah. I mean, um, I think that most people don't understand. Well, first of all, they don't really understand that nat gas is uh, not so much a heating issue as it is an energy generation issue.
The way I look
And
at it,
and so it's really tough.
the way I look at it is the exposure. Yeah, yes, I am short XLE right now
Right.
because it was just a technical trade based
Right.
on what I was seeing on the charts. I do believe it's going to be the place to be trading
Mhm.
and investing for, probably well into 2024. Because, like you said, what about next year, right? They filled their tanks in Europe this year. That means they're going to deplete their tanks, just like the United States depleted their reserves, and they're going to have to refill SPR.
Yeah.
So all these things, there that will have to be replenished. So I still think it'll be the place to be.
Yeah.
You just got to trade the movement. But and I've posted this before that when XLE is up, you can't really blame somebody for taking profits.
No.
And then we revert, and then you trade it back. You go long off the reversion. So we're reverting right now. I hope to close my butterflies this week. Uh, I think that'll be like a 200, 300%
Yeah.
trade. I'm just looking right now. DBC. Um,
Hey, John.
all right. So I'm flat. I'm flat right now. I'm up 3.5% on it.
Yeah. And
But my strategy when I bought DBC and DBA was I wanted to. I didn't want to. I didn't care if I made money. I just didn't want to lose money.
Right. Well, my guy, Dennis out in Colorado, the one who trades the futures for us,
Hmm.
um, he always says that. He says, in this current market, um, where everybody is losing money, the guy who loses the least money is doing the best. And
Right.
I get that.
Right.
And so, I mean, it's the whole thing, for the guys who go in and have a much longer term bent on the market, which is terrific. Um, it's why they write.
Right.
They
Right.
they just want to protect some of it. Um, uh,
Stay allocated and protect yourself.
right. Because I mean, I'm in stocks like I think about Paramount, for example. It's
Hmm.
gotten killed. Um, it doesn't owe me anything. I mean, I started with a 200 share position, right around where it is right now. And when we had that big blow up, when that fund that was buying it and margining it and buying more, um, and then busted out, uh, when they did their deal, Paramount, at 85, I was a seller. I think I still have in the account, I want to say, let's see, come on, let's see what it is. Paramount, I still have 50 shares that cost 22.48. It yields 6%. So
Okay.
I'm not really rushing to be a seller of it. I mean, you know how that goes.
Yeah.
I mean, I just don't want to be hurt by it, and clearly I have not been. And so, that's like a pretty big drop. But
Yep.
my thesis on it. Where the hell did my thing go? Okay, my thesis on it really was more involved with the fundamental side of it. Okay, so uh, you know, uh, uh, what's her name? Sherry. Um, it's so funny. My mind goes blank like this every once in a while. Um, Redstone, Sherry Redstone, who is the daughter of the guy. He just recently died. And so um, when I first looked at it, my attitude was, um, well, I'm just going to buy it. I really like the fact that it pays a dividend. And at the time, money was cheap and there weren't any dividend stocks that I was, really all that interested in. Um, except that I came across that and only looked at it from the standpoint of, they are the two biggest holders, he and his daughter. They were the two biggest holders, and basically that dividend wasn't going away. I mean,
Right.
that was what my mentality was. It's not going to go away. And so, I saw it, I saw what it was doing, and I just stayed with it. And so, I don't care that it's down from basically 100. It shouldn't have been up there, but it's 6%. Now she is only, even with her fathers that she inherited, they are now only the second biggest shareholder because Warren Buffett's been buying the stock.
That
And so,
Nazi, huh?
and I don't mind, he's way too folksy for me. I got tired of him probably 10 years ago, as far as listening to him.
Right.
Um, but you can't not respect him. I mean, the guy has done remarkably well.
Yeah,
But,
he's good at putting floors on things, right?
yeah.
So it's the same with Oxy, right? When he puts out that we're a buyer at 65, well, okay, maybe I should, you know,
Well, when he did the deal um, and he got those warrants to buy more,
yeah,
that was it. I mean, there was nothing else that I needed to, really understand about
right.
Oxy. I mean, I've been in love with the oil the entire time. And while it's down here, let's take a quick look. See, well, it's up 85 cents tonight. Um, I really, on a longer term basis, looking at this on let's go to the weekly. Can everybody see these charts that I'm putting up?
Yeah, you're fine.
Okay, good. Okay, so here's the 3-year weekly, and I got all these lines drawn here, and I said in this area, as much as I like it, um, I'm seeing a blow off top and then a lower top and then a hard reversal to the downside. And if it breaks 100, I can't be long anymore.
Yeah.
And
Well,
so,
that
we came through and all we've done is this chart. You know what this chart looks like? You won't believe it. You see this one, and
is that a weekly or a daily that
that's
you
a
have up?
weekly,
Okay, a weekly. Okay.
and it's the same chart as this. Blow off top, lower high, lower low, lower high, lower high, lower high, lower high, lower high.
And
Uh,
that is that a
that
daily?
that's the weekly
That's
of the
another
bond.
weekly. Oh, okay, okay.
And as good as it looks down here, in order for it to really break, you got the fib number here at the what lines up nicely with this is the fib number and the round numbers in this happen to coincide.
Yeah.
Like this 134 and change is at 135. This is well, let me go another year so I can see the numbers. Okay, so the 23.6, which I know is not your favorite, lines up though with 135 on the
Hmm.
bond. The 38.2 lines up with 145 and 26 seconds. Same thing for 155. This, in order to turn this positive, I'd need to see a close over 146. And I just don't think we're seeing it. And if
Yeah.
we do, it's only because we're in a deep recession.
Yeah, I would really need to. I mean, your moving averages to me, I would need to see them at least start to flatten.
Yeah,
So here's what we got. I would need to see the moving averages begin to at least flatten and show that they're slowing or moderating. You
right.
got the MACD starting to indicate that momentum is starting to come to the
Yeah,
long
it
side,
looks like it's trying to cross here.
or at least it's found its bottom at this moment,
Right,
especially. And so for everybody, and please, anybody, if you have questions, chime in. It's not just Cam and I talking, but that's the thing I like about a MACD or an indicator like the MACD. That's not a bounded indicator. I hear a lot of people talking about RSIs.
right.
Nothing wrong with an RSI, but understand the math behind an RSI is that based on its math, it can only measure effectively so far.
Yeah,
I don't hear it much in your Discord, Kim, but I hear it in other Discords that, oh, it's overbought. Well, overbought can also mean that momentum to the downside is as strong
right,
as the indicator can possibly measure.
right. The things that are a function of themselves are good indicators, but they're only relative indicators. And so there's a problem. One of my best friends, business wise, best friends, uh, was an analyst, at Merrill Lynch Asset Management before it was bought. And he started giving me um, a lot of grief about the fact that I was using, all of these moving averages, the 5, the 20, the
Mm-hmm.
50, the 100, and the 200. And he said, I don't think you can do that. I mean, I understand on the, um, when you use it on the daily, but you can't really use it on the weekly. And I kind of let it go until I was looking at something and I called him and I said, you're a fucking idiot. um, a moving average
Damn, that's the first
is
time I've
the
heard you swear.
relationship between a 5 period and a 20 period.
Yeah,
Doesn't matter whether they're weekly or monthly or anything else, the relationship is with itself. So
well,
it has to work.
at a quick glance too, it gives you an indication of the strength of a move in a particular direction. And you're absolutely right, whether it's, a weekly or a daily or a 30-minute. Um, but just knowing how are my moving averages stacked and what's the angle? And like I said, it's other than the 21 day, right, which I still maintain as a mean reversion moving
Right.
average. But I want to know, what are they doing? It's no different. You use Bollinger Bands. I use Keltner channels. Are they
Yeah.
curling in? Are they curling out? What are they doing? So when you see that flaring of bands, that is that particular indicator, Bollinger Bands, Keltner channels, expanding to accommodate a move
Right.
versus, or is the upper band curling down and the lower band is flat? So there's nuances to that. And
Not only are there nuances to that, there are nuances to how the individual stocks relate to them. I think nobody can convince me any differently because it's been 45 years of observation. But every market and every stock has its own personality. It
absolutely.
trades a certain way. And I don't know whether it's because of the makeup of who owns it or the fact that they become favorites with um, any particular group. And I don't mean necessarily, the apes and AMC and, that stuff. But, you know, a stock that is heavily owned in the public, excuse me, has a completely different personality and trading than a stock that's 80% institutionally held.
Absolutely. And I would boil that down to the beta.
Yeah.
If you see something that's a 2 or 3 beta, I would, so I use Keltner channels or average true range ATR on many of my charts.
Yeah. I use the Kelter too,
You use
sometimes
Keltner. Yep.
in relationship to the MACD.
Yeah. So to see a high beta moving to the 2 or, +3 or -3 with regularity or moving back and forth within that channel on a high beta,
Yeah.
that's not surprising. A low beta like Coca-Cola, probably,
Right.
right? So yeah, it should, at least theoretically, on a strong uptrend, it should maintain price between the 3 and the 2 and just kind of stay there and move along. But yeah. An interesting thing though, I think what's really hard for many people is or being comfortable with, speaking of beta,
Right.
we're in that time now. And I was just looking at the charts and maybe I can throw mine up, but where we can look right now is say, what sectors are above the 200 and which ones are not.
Right.
So I was just looking this weekend and XLI is about to get its golden cross.
Yeah.
To the upside.
Somebody was talking about that too on the S&P.
Yeah. So XLI. So if you, but again, so and XLV is maintaining above the 200, well above the 200. It just had its golden cross.
Yeah.
Um, but what's interesting is I'm seeing it's the sectors that tend to be lower beta that are in that strong position. High beta sectors and high beta stocks. So point being is that I totally get it. Tech has been the darling of the last many years.
Yep.
But if
Well,
you're a
there's your
long
XLI.
but if you're a long trader, you gotta start watching the other sectors.
Yeah.
You're gonna be so disappointed. XLC, XLK, um, so XLV, yeah. So I don't know which your colors are different. So, but your canary yellow and your orange
Okay.
must
So
be your cross.
the purple one is the 5, blue is the 20.
Okay.
The orange is the 50. Or the yellowish one is the 50. The reddish
Yeah.
orange one
That's
is
a
the
200.
100.
Oh,
And
100. Okay.
the blue and the light green one is the 200.
Okay.
And I could see this crossing up. I'm not sure I could see it crossing through 104, but
Yeah.
I could see it crossing to the upside. I mean, just is crossing to the downside here. 1 second, let me make it a little clearer.
Yeah.
I mean, there it is.
I think what's probably going to happen is you're going to see a loss of temporarily. You're going to see, look at your MACD, right? It's really kind of losing steam,
Right.
just kind of flattening. But I think that's where we're kind of what do we can call it consolidation.
Yeah. Well,
Um,
the other thing is that I've listened to a lot of people, um, both over the weekend, and then I'm in front of the screen and in front of the TV from 7:30 to 7:30 or 8 o'clock at night because I make notes all day for the closing comment and of course for the daily note, which, by the way, if anybody has looked at it, I'd love to have your opinion, because on Thursday I changed the way that I list the sectors from all of those stocks to just the ETF and then the biggest percentage gainer and the biggest percentage loser. And I think that that is representative. If anybody, has an opinion about that, I'm more than willing to listen.
yeah, so I'd be curious. So we got John, who apparently is in Moscow. Um, Elric, Hanley, and Duo. Any
Right.
questions, or what are you looking at for next week? So I did post in the room,
I
folks.
saw that.
We the IV and the expected move expanded dramatically. Be prepared for a lot of movement this week. Um, uh, we got CPI, yeah, we got the Fed, but we also have an extremely large OPEX on Friday.
Oh, yeah.
The biggest for the year. Remember, we're coming
Right.
into the end of the
I
year.
mean, well, you have to remember that even though it isn't the year end number,
Right.
it is
It is
the year end close of the options, even though there are weeklies for the next week. And it's the end of the quarter, it's the end of the year, and it's, and the futures too. I mean, they'll roll these futures to next year's.
Yeah.
Oh, yeah. And
So
again, all of those things that you cited as news are really big things. I
yeah.
honestly, the way that the numbers have come out, I don't really expect them to go 75, but I could see where they could.
Well, I don't remember if it was Guy Adami. He's one of my
Yeah.
favorite on Fast Money. He did make a good point that yeah, they could do 50, but remember QE represents another 25. So even if they do
Right.
50, you still get 75 tightening because that QE that nobody seems to be paying attention to
Right.
is tightening. So if they do 75, theoretically that's 100. But yeah, I don't know. It's I maintain the position that I don't even know why we're talking about it because we know where we're going. We
Yeah,
just don't know. Okay, we're not quite sure how long it's going to take to get there, but we know where we're going
right,
with rates, and we know that they're probably going to stay long, higher for longer, as they've been saying. So
right.
I don't know. I'm not looking for a pivot, quote unquote pivot, until
Oh, I don't think so either.
2024. But so it is what it is. But yeah, I would just say be prepared for a lot of movement within the expected move range this week. A lot of the market makers are pricing it in, so just be prepared for it. And Duo, I don't know. The last report I got is I just heard that Santa Claus was sighted down in Boca and he's
Yeah.
taking Christmas off this year. So whether or not you're going to get your Santa Claus rally or whether or not we already had our Santa Claus rally,
Well, see, now
I
that's
don't
the
know.
other thing. There are a lot of people who are talking about that. And so I go back, and I think I already mentioned it in the narrative that will be on tonight's letter. Um, those cliches have not worked particularly well this
I
year. The sell in May and go away, and
right.
I mean, all of those things, they are cliches. But here's the fallacy there. What difference does it make on any of these rallies or declines when you know that on my letter I put whatever the stock traders almanac is,
Right, right.
the most current. I mean, I pay for it, I put it out. He probably wouldn't like to know that, but the fact is he's very specific. And I think I wrote
I should order mine. I may have
in
ordered.
my narrative tonight that the Santa Claus rally is not something that you can just throw into December. It is the last 5 trading days of the year and the first 2 trading days of the new year.
Yeah.
On top of that, we also have the first 3 days of the year, which goes into the first 5 days of the year, show how January is going to be. January shows how the year is going to be. I mean, you have all of these things piled on top of each other. But unless you really look at the results, a lot of those results were 1.9% gain, 2.3% loss. I mean, we're talking about things that it in the past has taken a month to do what we do every single day now. So, how important is the history of something whose average rate of return was, 4%?
Yeah, when we get
How
3%
important is
days.
that when we can have a 4% move tomorrow?
Yeah, absolutely. So, yeah, so me personally, I stopped believing in Santa Claus rallies in 2018 because on specifically December 24th, 2018, I just remembered that's okay, that wasn't seen anywhere. So, Duo, you do have a question. So, could people be misinterpreting RSI and how to utilize it? Question mark. It's one of my favorite indicators for short-term trades. That's fine. That's cool. For shorter term trades, but I think about it as a strength, not oversold, overbought. Yeah. Okay. So my position on an RSI, and an RSI is great for what it does and what it's programmed to do. But remember it, so I shouldn't remember. So just take into consideration the RSI by its math is what's called a bounded indicator. It's only capable or accurate up to a certain point. And that's where you start to see that weird movement above and below, overbought, oversold. You kind of see that weirdness sometimes. That's because it's beyond its capabilities of measuring it. So continue to use your RSI. And I would say continue to use your RSI because there's a lot of people that are going to trade based on the RSI. So you might as well look and see, oh, what are they looking at? But at the same time, pair it with an unbounded indicator like a MACD So you can see, is it really, is the momentum really stalling because it's overbought or oversold? Or, what is my histogram doing? So pair an unbounded with a bounded. I don't know. You said my favorite indicators for short term. I don't know what you mean by short term, whether or not you mean your intra week or day trade or what, but that's the way I approach it. I would never use an RSI on its own. However, I will look at an RSI because I want to see what other people are looking at. Cam, you got any?
Nope, I'm good.
Okay.
All right, so now I have this back to what I want it to look like. So Steve Grasso Friday was talking about what he thought was going to be, as he put it, a rip your face off rally here.
Yeah, yeah.
And frankly, I just don't see it. This is the weekly. We topped out, broke. And by the way, one of those things that nobody really talks about very much is if the major averages break their December lows in January, you usually have a pretty horrendous year. And that's exactly what we did this year. Beginning of January, December to here, not only did we do it, it only took us 2 weeks to do it. And we continued down. So we have another lower high.
Yep.
So we have the high and a break, a lower high, and another break. I don't go to this one, but
Yeah, no.
a lower high here. I go to this one because honestly, that's the third point on what a valid trend line should look like.
Mm-hmm.
And we break again. Now, on this break, we hit that long-term number. We hit the green one is a 200, in this case, a 200 week
200 week, yeah.
MA.
Yep, yep.
And it was also the last important breakout along this 3,800 line, the last important breakout before the final run to the top. And this number, this 3,500, or what is this? 3,502 is also an area where we blew off a little, came back down and tested the breakout, moved up, came back down and tested the breakout with a higher low, and then broke out.
Yeah.
So
on the question, so here's what I'll position, and then I would love to kind of share what we're seeing here on the open of the ES and what have you. But to the question of the Santa Claus rally, and then what we're seeing here, I mean, Cam's got his trend line. We see that, and we say it in the Discord, is that you can't trade the market we want. We got to trade the market we have.
Yeah.
Right. Cam says that a lot. I'll echo that sentiment, and it's the reality. So where I'm looking at it is, okay, the trend is valid still. And the trend that we see, you got the trend line. You also see it's a 200 daily SMA. It hit it and failed again, and now we're moving back down. So for all practical purposes, we're maintaining a lower high, lower low, and we got to stay with that until proven otherwise. So for that reason, call it bad timing or what, but because of where we hit the 200 and because of what's happening now and the trend line, we had the Santa Claus rally.
Yeah, they may have pulled it forward.
I would agree. Well, what haven't they this year?
Right.
What haven't they since the COVID crash?
Yeah.
Everything's been pulled forward.
Yeah, it sure has. And again, a lot of these statistics that people keep throwing out are statistics that are based on really minimal numbers.
Yeah,
not
hell,
markets that had this kind of volatility. I mean,
no,
look at the MACD down here too.
yeah,
It is as close to rolling to the downside as it could possibly be. I mean, get out of there.
yeah. It's I don't know. I don't know if it's because people don't like buying puts or what. Or it's it shouldn't matter to us what direction we're going, folks.
Yeah. And
It
that's the one
shouldn't.
thing that I just love in trading the ETFs or the companies that are involved in futures,
Yeah,
because futures is really, I know that a lot of people think about it as kind of the Wild West, but it really is one of the more, I mean, there are markets that aren't honest,
right.
but
Oh,
as you deal with the indexes or the bonds, those are markets that are much too big to have anybody really distorting them.
yeah. And
But,
I mean, I myself, I'm told by several people that I know I should do futures more. You can always do the micros. You can do the
yeah,
smaller contracts, so you don't have to do if the mini is too big, go to the micro. But or whatever. I mean, trade however you like. But a telltale sign for me is that I lost on I traded SPX long 0 day on Friday, assuming there would be some orchestrated effort to move back to the lower edge of the expected move. Back to the lower edge of the expected move. Total failure. We ended up closing 2 standard deviations or 1 standard deviation outside of the lower edge of the expected move. That's momentum into Friday.
right.
So I can't go long against that kind of momentum, and even the market makers were not able to move it back to
Right.
within the expected move. That's saying something.
Yeah. And I want to make the point that while I love to trade, Josh Brown says something. For those of you who don't know who he is, he's on Fast and he's on all the time on CNBC. And he's probably one of the most
Genuine.
honest and forthright
Yeah.
uh, person that is on there. And he makes the comment that we as individuals have a dramatic advantage over fund managers or institutions. And that advantage is if we don't want to trade, we don't have to trade.
No.
We don't have to worry about beating any particular index. We don't have to do anything. And so, every once in a while, there'll be something I just don't understand. And my answer will be when in doubt, stay out and just don't trade. And, a lot of time that turns out to be one of the better choices is simply watch. I find that if I take a couple of days off, which is something I never do, but if I were to go away, on a vacation and stuff, I used to take my laptop with me. As a matter of fact, before the age of um, quick speed internet and smartphone availability, I used to take one of those. I don't know if anybody here has ever seen one. You probably have, Dale. There was a company that put out a handheld with a I guess it was satellite based, and it had a big long um, antenna. And when I used to drive to go to meetings in New York from up here in Boston, I used to have it on, And I literally used to open my sunroof and have it
Mm,
sticking out and in order to see prices. Um, but I notice now that when I take a couple of days off, um, I come back with a fresh set of eyes and I look at stuff a little bit more objectively. And I find that very helpful, just to unplug. One of the things that I did notice when I was leafing, as you mentioned, Dale, about the options, the puts, I did notice two things that, and this is in I think it's about page 3, my market lab. There's the CBOE and the S&P um, short ratio, or put call ratio. I'm not saying
yeah,
that short.
yeah.
And on the CBOE, it was up hugely. 95 up 37. That's a big jump.
Mm-hmm. Mm-hmm.
And the S&P was 142 up 21, but on uh, because I think it's Y charts.
Oh yeah, yeah.
Y charts puts out the information. Here we go. And what amazed me is on the 7th, what was the 7th? Wednesday? On the
Um,
7th,
yeah,
it literally went from 73 on the 6th to 146 on the 7th before coming back down to 95. So 146 versus the previous Friday of 58. That's almost a 300% move. And my recollection is it was pretty much the same.
oh,
It was pretty much the same, although it went from 144. Now, see, this is the S&P one, I think, is not. Oh, this is the S&P, the SPX. One
yeah.
second.
Thanks, Hanley. You got to take off. Okay.
Yeah. Uh, that's not it. Anyway, it was not as excessive as that, even though um, it was higher. CBOE 95, S&P. I used to have an S&P one here somewhere that was specifically, let's see. Yep. No, it was not nearly the same, but the bottom line is it was a pretty extreme couple of days in there, even though it kind of settled down. The other thing that I noticed, because um, when I do that market lab with all of those statistics in it, I was leafing through the barons, going from the back to the front, because that's where all the statistics are. And I also noticed that the new highs and new lows for stocks um, have moved back to about a 2 to 2.5 to 1 more new lows than new highs again.
Yeah.
And, for a market, I mean, you look at this at the S&P and you see, you know, for the last, this is going back until, let's call it the beginning of the year, we're kind of mid range. And to see those numbers still being as heavily leaning to the new lows at this point is a little disturbing. I mean, if you're long, which, basically the only we only have one position on in the UNG, that spread that we put on Wednesday, and that has widened from $1 to $1.66, and I'm guessing that with the action tonight in the nat gas, I'm going to guess that's going to go to 210, 215 first thing in the morning when this
Yeah.
opens.
So
So, the only other thing that I actually own, which is for myself, and this will show you that I practice what I preach. I bought Boyle, not the calls, the stock.
okay.
I bought 100 shares because my risk tolerance, I figured, buying 100 shares and I could make $5 or $10, or I could lose $5 or $10, which is not a trade that, frankly, I'm comfortable with 1 to 1. But as it came down and I went in to buy it, I started looking at it was about, when I bought it, I think it was about 28. And uh, when I looked at it, let's see, when I looked at it, I thought, okay, well, this could get back in here into the 45 area. And, if it in fact breaks to the downside, I don't think I'd hold it much below here, which is 24, I think. Let me look. Yeah, this
Mhm.
number right here is $23.68. I had to stop in at $23.65.
Yeah.
And, we got down to, you know, 25.44, and then turned right back up and closed, almost 35. So, a move, my 45 to 48 area is right here. That's really not much. And I'm guessing at 3 to 1 leverage with the net gas up, I'd probably be a seller tomorrow up
Sure.
there,
Yeah.
just because that's the trade that I made. But, you look at this and you see it's kind of an interesting market and everything. But what you don't look at, and this is something that I have a problem with all the time, I ran across stock charts that the chart just looks fantastic right up until the time that I look at the price scale and I see a chart like this where this is $38, this is 38 and a half, this is 39,
Right. Yeah. That scale can throw
where
you
I
off, right?
see what
Especially an
it
options
can
trade.
do, but
Yeah.
in point of fact, it can do nothing
Yeah.
because of the scale. I mean, the best one for that um, is I've gotten caught. I got caught once hard trying to trade the UUP, the dollar index, and it was probably a year and a half or 2 years ago. And I bought an option, a bunch of options, um, calls, if I recall, and it started to move, and the chart looked great, and the theta on the options just absolutely killed me because the big move was from, you know 2240 to 2270.
Right.
I couldn't even make money on the 23s on that.
And what screws you up on that too is that I noticed that chances are when you look at the options chain, they trade at $5 increments.
Right,
So there's it's gonna move within a strike,
right.
right? So it's kind of, oh, that looked great. Oh, never mind.
Yeah,
Yeah. So you had mentioned, so Josh Brown, which I do like, and I do like his, Friday program, The Compound. I watch that like every weekend.
Right.
Great guests on there. But he had a guest on a few weeks ago, and I was following him on Twitter. I can't remember the guy's name now, but I liked his approach to technical analysis, and I liked what
Uh-huh.
he had to say. So I started following him, and then I subscribed to his email to say I would like your updates. But he was really, really pushing the new stock, stocks making new highs,
Right.
saying it's over. I don't know why everybody's short. Look at the number of stocks making new highs. And that's great. I'm not going to argue with that point. The problem is when you're trading the index in a market cap weighted index, it doesn't matter how many stocks are making new highs if the wrong stocks are making new highs.
Right. Right.
So that's a cool number, but it doesn't really mean anything.
Yeah. And something else that occurs to me and that has cost me money in the past is I was trading the XRT, the retail
Right.
ETF, because it looked really interesting to me. If you don't check what's in the ETF, you
Mm-hmm.
can get some real surprises. Um, the XRT, besides the normal retail that you would think of, Macy's, Lulu, Kohl's, etc., also has Home Depot, and worse than that, um, GME, GameStop.
Yeah.
So
Yeah.
I was seeing the action in the
Yeah.
XRT looking constructive, and I didn't know that, you know, 3/4 of the move that week was in GME.
Yeah.
And it continued, and it really warped the retail ETF. So you really have to be careful. Like, I don't really mind having Home Depot in it.
Yeah. Macy's, Home
Clearly they
Depot.
are
Yeah.
in the retail business.
Yeah.
But GameStop, not so much.
Yeah.
I mean, it's, you can really get caught on
Yeah.
the wrong side.
And that's a good point. So when you're trading those, when you're trading sectors or when you're trading those, it is a good idea. And this is for everybody, anybody watching this or anybody on here, do check it out, right? So it's the idea that you're going to want to look at the index. What are the components of the index, the sectors? Look at the sectors. What are the components of that sector? What's the weighting?
Yeah.
So, you can go to Yahoo Finance, check that out. I prefer ETFDB. So in that situation, XRT, you go to ETF.db, check out what are the components and what is the weighting.
Yeah,
And it's
one of the indexes that really got screwed up dramatically is, um, unfortunately, the Dow Jones transports. Um, because you look for the Dow theory breakouts, break up, break down, whatever it is. Um, in Let's see when this was, in November, the first week of November of last year, the Dow Jones transports for the week broke out and had a range of 15,859, which, was about down $30 at the low. And then it ran to 18,246. The problem is that entire move was one stock. Not only was it one stock, it was one stock that you would never think of as a traditional transportation stock. For the day on November 2nd, The index opened at 15,966 and had that high of 18,246 and closed at 17,039. And it was up 1,096, or pardon me, 1,096, up 7%. And that one stock was a stock that opened the day, that closed the day before. 1 second. Closed the day before at 171, and it had just come up from 100. It opened at 171 and it went to 545 and closed the day at 357, up 186, or 108%. Avis, symbol CAR. I don't remember what the news was,
Yeah.
but
Probably a Tesla thing.
Right, but because the index, like the Dow, is price weighted,
Yeah.
it was $176 stock that doubled. And so now, looking for a Dow theory breakout on the upside, maybe not in my lifetime, as good as the market may or may not be, because that one stock is in that one index, and it's only one of 15 stocks, 20 stocks. The Dow Jones Transports was only 20 stocks.
Yeah.
So, you really have to know what you're trading.
Yeah. So if I may, let's look at the open, since that's why some of the people asked, hey, let's do it at, 5:30, whatever.
Right.
Could I grab the screen cam?
Oh, absolutely. Do I need to,
Let me see. Yeah, you
I'm
gotta
going to stop share
host
and
disabled participation screen sharing.
participant. Wait, say that again.
It said, oh, hold on here. It said host disabled participant screen sharing. So you must
Yeah, where do I
enable.
find it?
I guess.
Participate. Try
Or
it
if you
now.
just find, okay, hold on. Okay, here we go. Cool.
Okay,
Thank
good.
you. All right. So I'm going to go to Thinkorswim and let me know when you see my screen.
Great.
Do you see it?
Yep.
Okay. So you will hear me talk from time to time. Why did we open high? All right. And I can understand that. Wow, we open higher. I'm excited. I'm bullish. We're going to the moon. Okay. That's fine. But so the reason you hear me talking about VWAP and volume profiles is because they are so valuable in how you see things. So we can see this is the cast session. And for me, an intraday VWAP, the VWAP that starts at the open, well, actually a little bit before the open and goes all the way, is always cyan color. Okay. VWAP or VWAP, if you're not familiar, volume weighted average price, volume, then price, volume, then price. So the volume weighted average price, we can see it got well above, came down, hung out there, and then we had this drop down to a two standard deviation move. But look where the VWAP was. Where did volume tell us there was price agreement? Up here. Where did we open? Up here. The other thing on the volume profile, point of control on my charts is always the white. Point of control is where did the most volume trade for that time period we're looking at. So we're looking at yesterday or Friday. Friday's cash session. Where did most of the volume trade? Right in here. Where was the point of control? Where did we open? So these are valuable things that you can add to your tools or look into, are things like volume profiles and VWAP, because had you seen, without this, it looks like, oh, we're gapping up and maybe a gap and go. No, we just moved back to point of control. We just moved back to where volume says this is where price agreement exists. So it's kind of takes the mystery out of why are we going to certain places. And also, anytime I see price get that far away from VWAP, I have to assume that a reversion is coming. It's going
Right.
to go back, whether it's a volume profile or VWAP. But I just wanted to share this because we were talking about, looking at the futures and the open. Yes, we're gapping up, but we're not gapping up anywhere that couldn't be expected. Thanks, Cam.
Where is a chart that I've seen you use with the volume to the right?
Oh, sure. Okay. All right. So I will use that on some of my toss charts, but it's normally trend spider.
Right.
This here, right? Yeah. So this is trend spider. This is a product I started using in 2019 when it was still in beta. I really like it. You might be able to see on the side. I got to move all of your pretty faces out of the way here. Right here, like right now, I got just the indexes or the sectors up, but this is a
I have,
volume.
well, I'm still seeing the chart that you were just working on.
Oh, wait a minute. Okay, let's do
Swim.
this. Okay, I'm going to stop sharing,
Okay.
share screen, and I'm going to do entire screen. Yeah, I just did just toss. So let's do
Right.
this. Screen, share. Now, do you see it?
Yes.
Okay. So this is TrendSpider. This is a browser-based. Well, you talked to the TrendSpider guy, Cam, a couple years ago. Remember we had a call with him, Jake from TrendSpider.
Yeah.
Yeah. Okay. So Cam and I had a call with him a few years ago. It was still in beta at that point. I like it because it's a browser based. I know there's a lot of people that like TradingView. I got nothing against TradingView. But what I liked about TrendSpider is they really, a core of their charting was anchored VWAPs and anchored volume profiles. So what I liked about that is, okay, so what you see now is you see the volume profile, and I've anchored it, and here, look at how easy it is on TrendSpider. Here's my line. If I want to change, I want to see what's my volume profile based on a particular point. I just grab it and drag it wherever I want. There's my new volume profile.
Yeah.
Same thing with the VWAP. If I wanted to, so what I have now, these are Heikin-Ashi candles that I have on here now. But if I want to create a VWAP, an anchored VWAP to a certain date, I want to say, oh, here's this high. I want to create a VWAP, create creative anchored VWAP. I just click it and a new one appears. So I do like this, and I do like to see where on my toss charts I can put. Here's the thing, I can't create an anchored volume profile on toss. I can do a 30-day, I can do it based on the settings that are available in toss, but I can't do, come on, work with me. I can't do the drag and drop
Right.
to any particular date. So what do I have this stuff to now? Yeah, I have it to the beginning of the year, top of the year or whatever. Excel, what I got here, XLV, that doesn't really apply, but beginning of the year, create a volume profile. Yeah. So,
The
I
other
mean,
thing that I really like about their stuff is the raindrop chart.
oh yeah, yeah.
I think
Raindrop.
that is really above and beyond. I really like that because for me, it's easy to look at it and see that it's a combination of what I look at relative to both volume and movement.
Exactly.
I mean,
Yeah.
it's really, if you put that up. I mean, all you have to do is look at it, and I find it incredibly helpful.
Yeah. So, I mean, somebody can throw it in chat what you might want to look at, but I do agree. So this is one of their innovations that is unique to TrendSpider is really what they're doing. I'm blowing it up as much as I can,
Yeah.
but all it is a price bar. And you can kind of see there's a little tick for the open, there's a tick for the close, and then they throw volume over it. So we can see here, this move back down to the 10. That's my 10 EMA. There was no volume there, right?
Right.
So even though it went down to the 10 on the bar, there was no volume. The volume was concentrated. So what they do is they take a price bar, and this is a daily price bar, and they divide the price bar in half, first half of the session, second half of the session, and plot volume on that side of the bar where it existed.
Yeah,
So yeah,
even
so on,
going back 4 days, you see the move to the downside,
yep,
even though there was a little more volume on the bottom relative to what the volume is on the chart in general, the quote personality of the stock, it
yep,
really wasn't much, regardless of where it was going to close.
yeah, exactly. Yeah. So raindrop candles are exclusive to Trend Spider. So yeah, so I
Oh, by
will.
the way, Duo just sent a chat to us that said it's like the equivolume chart, and that's something that I have started to use lately, and I find it incredibly helpful. If you could see the equivolume on, put up boil on this
All right,
as a symbol, will you?
sure.
You can see that down at the bottom, it really was wider than it was tall. And on equivolume, that's called blocking out. And what happens is at tops and bottoms, you generally see um, these rectangles
Mm-hmm.
longer than they are tall. And that just shows massive volume in a diminished range.
Yeah,
And that really, I find that really great because it's really reliable
yeah,
from the standpoint of what you're looking at. I mean, I do that. I use the point and figure charts. I mean, I do as many things before I put on a trade where I'm responsible for other people trading. Believe me, I've looked at the bar chart. I've looked at the point and figure chart. I've looked at the equivolume chart. I've checked the delta on the options I'm willing to buy. And I mean, it's all there. But a lot of these little shortcuts are, really tremendous.
yeah. So let's do this. So I have the volume profile. I mean, this is the volume profile. Pick whatever date. So there's December 29th. But if we say, since this low, where is that volume? Right. So now I have my VWAP here. Volume weighted average price is here. Point of control for the volume profile is here. And you can see how it comes way out.
Right.
Right. So I just threw that on real quick. The other thing I was able to throw on real quick is what they call it the gap snake, but it's just a gap detector. So we can see what it did. Filled that gap perfectly.
Yep.
That's your gap right there.
Yeah.
Filled the gap perfectly. Where else did it fill the gap to? Right to that volume shelf where it started to
Right.
appear. So it came down here, started building volume based on this. And remember, this goes back to where we anchored to? July 5th. I just put it on that previous low. So yeah, so we continue to build volume here. Well, we can see that's where volume existed going back to July 5th.
Yep.
Came down here, found support,
I mean,
found
you can
buyers.
see 4 days back that it's a narrow range,
Yep.
but the volume really increased.
This right here tells
Yeah.
me it found buyers, right? There was volume there ready to buy. Found buyers, filled the gap. Now we're back here. We're coming
Yeah.
back to point of control. So yeah, some great tools here. So this is called Trend Spider. The other thing I really like, and they did this. This was based on something. This is a new thing they just put on. They called it the Webster's Powered Trend, and it comes out of something from Barron's, and I don't remember what it is, but it just shows me, things things to look at. But what I appreciate that they've done recently or over the last years, they've added so many things. I can look at so many things in here, and I can look at utilities, basic materials, energy, miscellaneous,
Yeah.
real estate, all these. You can pick something, aerospace, defense. Are you into defense? Click it. Here's the names.
Yeah.
Sort it by what's moving and what's not moving. So yeah, they've been, bringing some great innovations into TrendSpider, and I will continue to use it.
Yeah. I mean, there's enough there that it really makes sense to be able to do that.
Yeah, and comparing it to TradingView, I used TradingView a lot in
Right.
2015, 2016, 2017. The reason I moved over to TrendSpider, it is browser based.
Yeah.
They do have a mobile app that works pretty well. But I can't do that stuff I can't do Thinkorswim while I'm out traveling or something like that. Or
Right.
I won't.
Or
But
working.
but so a browser-based tool like TrendSpider, I do like.
All right, folks, unless you have anything special that you want to ask, it's almost 8 o'clock. I haven't finished your weekly letter yet. I need to finish the narrative and send it out. So I'm going to, unless, again, if you have any questions, just ask. If not, this recording will be up. It's an hour and a half, so to convert it and to put it on YouTube probably won't be for another hour or so, but it will be there, and I will post it in the main room as well as in the behind the curtain section.
Okay.
All right.
You have a good night, Cam, and I'll see everybody for the open.
All right. Thanks, Dale. Thanks for the help.
You bet.